Well, what's your view on the Kenyan markets at the moment, where over the last few sessions we've seen pretty subtle movement, and not just on the equity front, on the currency side of things as well?
Well, Alicia, as you've just put it, yes, there's been quite a bit of movement. But just to note that the equity market has actually been very impressive. It's just been picking up. If you look at the month of October, coming all the way into this month, the market has actually moved from around 3,000 levels to 3,080 levels. That's around just 2% up. It's because I think as we are building up towards the end of the year, we're just seeing investors sort of trying to close the year on positive territory, especially the institutional investors who really have to report positive gains. On the currency front, again, I mean, things seem to be getting much better. That's why you're seeing the shilling strengthening a bit. Of course, the central bank has been out of the market, and so it's been strengthening the shilling to that extent. Tourism earnings have started picking up. Of course, this is around the high season, and so that's why we are seeing all these movements, and I think they're positive movements, if you ask me.
If we take a look at the KenGen Bond, I mean, we saw it launch trading on the automated trading system yesterday, and it's opened the door now for electronic trading of debt instruments going forward. And many at this stage are forecasting increased trading volumes and participation on in debt investor prospecting moving forward. What impact do you see this having on the equity side of things once more companies come on board?
Of course, we have to wait, first of all, for all the other corporate bonds to be listed, and of course also the government bonds to be listed, because if you look at the corporate bonds which are already listed, they've not been trading. And I mean, if you look at the treasury bonds, that's where most of the trades have been taking place. So once the treasury bonds are in the automated trading system, I think you may see a bit of more investors then looking at the bond side or the fixed income side to get a bit of returns. Of course, the equity markets have not been very impressive. And so in times like these, when investors have not known where to put their money, I guess then they would be looking at the fixed income market to try and get a bit of return from that. But then it's also important to note that we have investors are usually a bit segregated also. There are those who are just normally, they seek to get the risk and to get the return. Mm-hmm. And so for those, you may not see them moving so much because if you're looking, for instance, at your institutional investors, they've been playing on both the fixed income market and also the equities market. So for them, you may not see so much of a change, but it's more or less on the retail clients who've feared trading in the fixed income market because of the lack of liquidity. And so for them, you may see a bit of interest stirred up on that particular front.
You've made a distinction there between the more conservative investor and the risk takers. Is there a distinction to be made between local and foreign investors?
Yes, there is that, of course. If you look at the fixed income market, for instance, we've not seen any foreign investors coming into that particular market, mm-hmm. especially your government securities. And that has been precisely because of the process that you have to go through the manual process of trading. And so for them now, that will, of course, form an opportunity for them to come into the market and come a bit strongly and be able to access some of these infrastructure bonds which are offering very attractive yields. And so you may see quite a bit of interest there. Of course, if you look at your equities market, there's been quite a bit of interest from foreign investors, especially the past sort of 1 month, mm-hmm. 1 week. There's been quite a bit of interest. And so you may see now them also looking at the fixed income market to try and generate returns from that end.
Well, certainly where we have seen, surprisingly, a lot of foreign investor interest of late is on Kenya Airways. It was certainly a favorite for foreigners in Friday's session. We saw shares exchanged at an average of 25 shillings. Yesterday, that share price rising a further 2% as well. Why that reignited interest in KQ?
Well, I would want to look at it from the results that they've just announced. With KQ, of course, they've launched quite a bit of new routes right now. I think the latest is that they're flying into Congo. And of course, the African space has been where they've been getting most of their revenues from. Right now, I think they're doing 47 routes already. If you look at the biggest problem they've been having is because of the fuel price. I mean, they'd already hedged themselves at a very high price. And so because of accounting purposes, then they've been reflecting negative profits, or their profits have not been very impressive. But if you look at now the fuel prices, they've been moving upwards. And so as they start moving up, then Kenya Airways, from the perspective of their fuel, they start looking more profitable because then they're able, I mean, the loss they've been making from their hedges now becomes mm-hmm. Minimal, or much more minimal. And so I would imagine that the foreign investors are just trying to look at that and they're saying it's a good company, they have very good routes, they have very good planes, and so it's just trying to get a return out of that.
With Kenya Airways' future so pegged on the future of fuel pricing, though, is that not a concern? And is this possibly, the interest that we're seeing now, is this possibly just a short-term movement?
Well, it could be a short-term movement, but the fuel hedges that they had, if I'm not wrong, I think they're supposed to end next year. And so after that, they're able to get to new hedges. And I would like to imagine that management have learned their lesson. They may not want to get into, such lengthy contracts and, tie themselves to those kind of restrictive contracts. And so, the company remains a very good company. If you looked at their latest financial results, on an operating level, they are not profitable, but on a total level, are profitable, of course, because of the fuel derivatives. But then it looks like, as people start traveling some more and the new routes start generating returns, the company is definitely going to be a good company into the future. Stephen,
just very quickly, we've got carb acid as the top market gainer from yesterday's session. We had that share price trading 8.5% higher by the close. Are you anticipating a correction on that share price at some point? Because it has been rallying quite extensively since it resumed trade on the NSE last week.
Yes, I think there's going to be a correction on that particular counter. The news in the market is that the company is doing a bonus issue at the moment. And so once you get the shares credited into the shareholders' accounts, then you may see a bit of a correction, because then shareholders have more shares to play around with. And so they may try to just take a bit of profit on that. And so I would imagine that the current movement that you're seeing is not a long-term movement, but it's sort of a short-term movement because, of course, the company, of course, just came back to the market, I think, last week.